You're tuned in to Agriculture Today, and we start our Friday show with a grain market update with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Yes, thank you, Shelby.
Dan, kicking off our grain market conversation as we always do with what are futures looking like?
Well, futures have been reacting both up and down of late to weather issues largely. We've taken in stride what came out of the uh, May 10th World Ag Supply Demand Estimates reports and the relatively conservative supply demand balance projections and price projections that that they brought about, and then have been looking at or trying to digest different trends in terms of planting and crop development, et cetera. So I think we are right in the midst of the time. Heavens, here we are in um, mid to late June, heading in where we're looking at planting, crop development, et cetera. Still, we still have in the back of our minds those forecasts of potential La Nina influenced dry weather conditions in late summer, but that's still quote out there, and we'll I guess the market's decided we'll watch and see where things are at. I would say that so when you look at for corn, July corn closed at 464 per bushel, $4.64 a bushel yesterday on the 23rd, and that we had seen the July contract get up as high as about 475. So it's we're just kind of bouncing along, not really showing any great tremendous worry as of yet. Dees corn 486 and a half. We had seen Dees corn get above 490, 495, heading towards 5, and that's frankly kind of a what I would wonder about, Shelby, is if we do start to see more concerns about crop development coming in when we see Dees rise from its current levels to get closer to again these reference prices in the market. These places where we put a pin in, it'd be $5, 5.25, 5.50, something like that. But we're not there yet. When you look at wheat here with we've digested what the wheat tour brought and really know. I think the average yield is about for Kansas about 406, pardon me, 46 bushels per acre, not forecasting any major problems. And we've had some moisture coming in, et cetera. Yes, some concerns about treating for different diseases late season, but so far, kind of taking the mix of the good and the bad in the state. Generally, you've got prices that for wheat that have gone higher. A week or so ago, 640, 650, 660 here. Yesterday's close for July, the harvest contract, $7.10. So that's in play. And international concerns, worries about frosts, drought in the Black Sea region, some moisture issues. I think too much. Well, anyway, some crop production problems in Europe also in play. So you've got all that coming in to help provide some support on the futures for wheat. And again, 710 being the contract harvest contract number we're looking at. And then for soybeans, well, pardon me, and that I don't want to not point out how it wasn't but about 2-3 weeks ago we were down to 625 for that contract. So to have jumped up to just under 725 and to be at 710 now shows again in this type of an environment where the market's kind of their knee-jerk first impulsive response is to be pessimistic. Well, hey, we've come up 50, 60 cents. So that's a great thing. When you look at soybeans closed yesterday at 12.39, and again the low we have been up to about 12.55 there, 12.55, 12.60 thereabouts in over the last couple of weeks. 2 weeks ago we got up to that, broke closer down to 12, came back up. So to be sitting at 12.30, 12.39 and a quarter right now is surely higher than where we were over the last couple 2-3 months on the lows anyway. So I guess overall the uh, again we have planting for soybeans in the U.S. underway. We're at 52% planted overall in Kansas. Well, that was as of May the of May 19th. We're at 43%, again, about 4% ahead. So not any great concerns there. And I should say for corn plantings, we're in the US again as of May 19th. That would have been, well, that's last weekend, last Sunday. We are nationally 70%, 71% 5-year average. Kansas at 74%. That's 5% ahead of normal. So if we're looking for, well, as we look to planting concerns around the U.S., where there are problems, they're more isolated, where they've had too much rain, they've been delayed, but not really anything yet to really spur the market to sharply higher numbers. So it I guess when you stand back and look at the corn, the sorghum, the wheat, hard red winter wheat, and soybean markets, you there are different paths we can go forward, but perhaps if we have time at the end, we can take a look at that.
And Dan, moving on to talking about what we're seeing for cash.
Yeah, I think what's most noticeable to me is the improvement in wheat prices. Here in Kansas, you look at the highest price amongst those reported in some of these different areas, particularly in, say, Hutchinson, 705. Yeah, on yesterday's close. That's a terminal bid, export oriented, etc. 705 top bid, 695 top bids in the Salina, Topeka area. 684 in Columbus. If you go out to the west, things are lower. Garden City 656, 636 in Colby. And again, we're not harvesting any wheat here yet. The new crop bids, what really stands out again is in that Hutchinson area, 706 as a new crop bid, and 681 both Salina and Topeka, and others somewhat lower. So I think Kansas farmers, as they see those prices, they're surely better than they were a while back. We have the same conundrum, given the production risks that we still have getting to the finish line. To what degree do they go out and forward contract, lock in some of these higher prices, knowing that if wheat harvest does come on strong and we'd happen to get harvest reports that are average or better than average, as given what we've just been through, well, we'd probably go lower. So it's a time of risk, of I guess risk management in the markets for farmers right now. And when we look at other commodities, interesting that the highest cash corn price in the state, $4.99, Garden City area, 35 cents over. And I keep hearing rumors of, that's at the elevators, keep hearing rumors at feedlots of prices being higher. It is interesting that when you look at yesterday's closes on the at the ethanol plants, there's a bid in Kansas, top bid, a top bid 538 and a quarter, average bid in Kansas for ethanol plants at 510, and there's not, and the next highest bid in the whole United States is, well, 496 and a quarter in Nebraska, average 471. So in terms of averages, we're about 35 cents higher in Kansas for ethanol plant corn bids than anywhere else in the country. And that's to me, that's something to ponder.
And Dan, as we are talking about the crops, wanting to think about how this summer might look as it unfolds for all of those commodities.
Well, as we've just been talking about, we're to this point. We have and I guess our barometer of where the markets are going. So, by the time we finish out this year, again, 486 and a half corn, November beans at 1216, July again 710, and those are bids that are expressing, that show I guess attentive wariness on the part of the markets, but really not anything that's really showing that gracious, we're really worried. We're wondering about what could happen, and as in a half a billion or a billion bushels lower for corn, or 500 million bushels lower for soybeans, or something like that. So if well, we haven't had major price rallies yet, and we're probably going to be looking out into July, August to see what comes about in July. reproductive time, with tasseling and pollination for corn, flowering for soybeans in August, and really uh, when and for sorghum, that will be in pretty similar situation again. Sorghum so much driven by the export markets. That by the way, I haven't mentioned that this last week for corn and for sorghum, we had strong export markets, really great weeks, and rumors of more purchases. So that's a positive to not forget. But again, as we kind of talked about for wheat, uh, we're we're just on the cusp of a lot of very potentially volatile information that could come in and really affect that. And again, I still think that the wheat market uh, is singular. We'll be focused locally on what we have here in the hard red crop, but the world's focus is what's happening over in Russia and Ukraine, where they've had some weather problems and just a lot of uncertainty all at play as we look at the grain markets this week.
So Dan, is it fair to say that really the weather's still going to be the biggest player for what the crop's going to look like?
During these growing seasons, the weather is quote king. You know, it's the predominant determining factor, and as weather goes, then you have international users in particular starting to get they would get the if there's a shortfall in the crop, U.S. crops, given our export position, especially for well for corn, for sorghum, for soybeans, and also still pretty strong for wheat. Uh, then if you start to have buyers worry in the market about getting hold of supplies, that's when you have both the supply and the demand issues coming together, and that's still a possibility out there into the latter part of the summer.
Dan, I appreciate you taking the time to join us today and give us our grain market update.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but we'll be right back.